Visuals of Prime Minister Modi with Vladimir Putin as well as Xi Jinping are quite heartening, I must say, and a very strong messaging rather to the Western world. But that said, I guess domestically it's all about the GST meet this week.
Well, I don't know about the GST meet or not because as you already seen the resonance coming from the states, what's going to happen to them, who's going to be winner, loser, when it's going to happen. I think you just have to just wait and watch. It's a suspense thriller unfolding out there in the backdrop of the states saying what happens to our revenues, and very correctly so they're saying that, where is the money going to come from, because you already seen state governments not able to borrow money in the market in the last 2 weeks or so. So it's it's a happy situation to be GST, but somebody's got to pay the piper at the end of the day. If you don't reduce expenditure, to expect revenue buoyancy to make up for this GST cut in the short term looks to be a difficult scenario. You've seen the yields are going up. So it's a very mixed bag coming out. Maybe some companies may benefit, but broadly speaking, someone gains, someone loses in the end. For the market, it was an event for a few auto companies, maybe a few FMCG, or maybe optimistically. But I think by and large, the market has been sitting out and waiting and saying, what's going to happen in the end in terms of what gets cut, what gets increased, where will the government make up the revenues from? And therefore, it's not been let's be honest, political parties don't give away money free of cost at the end of the day. They will claim it back some way or the other. So let's wait. Let's not get euphoric. It's interesting. That's all I can say.
Well, interesting indeed. And of course, zero-sum game for the markets, as is the case always. Ajay, hi, morning. This is Snehi also joining in. Sorry?
Good morning, I said.
Yes. Good morning to you as well. And Ajay, I want to talk to you about the biggest trigger that we are watching out for. That is the GST meeting that's going to be happening on Wednesday and Thursday. What are your expectations from the meeting? While we, of course, expect consumption and autos to gain from this, any overall expectation that you have? And also, do you think this could be the fillip that the market needs to get out of this lull right now?
First of all, I think we are all overestimating the benefit going to come from the GST. That's my personal reading. Because while you may cut the rates down at the end of the day, and how much it gets passed on, when it gets passed on to the consumer, there is a pipeline of supply already built in the market. What happens to them at the end of the day for the next 6 months? So it's not so easy as to say that, it's not like an oil price reduction, that you do it today, and by evening, everybody can get the benefit of it. That's not how it works in GST reduction. It's a whole pipeline. People are manufacturing. The labels have to change with the new supply. What happened to the old supply, which is built at the old rate? So it's a very complicated gambit. It takes time for it to come out in the end. Number two is balancing that at the same time that you looked at the GST cut. We suddenly have seen a rupee going down by 3.5%, 4% in the last 2-3 months. And that takes the burden on the oil company, oil imports, everything. So yes, there is a benefit on GST, but there is a flip out there saying that, listen, with the rupee dollar where it is, you're going to have an increase in cost of all the commodities, including the basic product called oil at the end of the day. You may not pass it on, but that goes from some pocket. So I think euphoria partly is justified. Maybe for a company like Maruti is justified. But I think broadly speaking, on a structural economic standpoint, these things take time for it to percolate. To expect a short-term blip, GST come karenge and everything will fly, it doesn't work really in our view. So temper expectations down. And anyway, our expectations are quite low from the GST cut. But whatever it is worth, the rupee just took the glory away.
Sure it did. But Ajay, so do you tweak your portfolio at all? Do you add more consumption or no?
Of course not. Of course, absolutely not. And one of the things which I think maybe we're ignoring, maybe we kind of just think risk when they're non-existing, is the heavy rains across this country. Now that has meant two things: people indoors, not going to be able to shop closures, commercial market closures, and so on and so forth. So at the end of the day, last 1.5 months, I guess, would be taking a toll. And if September is also as bad as they're predicting it to be, the consumption story is going to be going down further, not higher at the end of the day. So we are not personally very, very enthusiastic to say the GST cut would go people with checkbooks and start buying out there. Tariff impact, people job impact, all put together, rain impact, dislocation impact. There are a lot of negatives also slipping. Yes, the government is alert to GST. I'm happy with that. But whether it will translate to earnings, I have my very, very clear doubts on this matter. And even if it translates, our valuations are absolute nutcase. We were discussing aside point. If you look at America's top two companies in terms of valuations, is Microsoft and Nvidia. Look at our company's highest valuation of what? Trent and DMart. Can you imagine an economy which prioritizes a retail company versus tech? That's where the story is today.
Yes, absolutely interesting take over there. But Ajay, within the consumption basket, it is autos where the excitement is. Help us understand, what are you making of autos? Because we believe that you have been bullish on this particular theme as well. But how much is already in the price as per you? Because we have seen a lot of these stocks moving higher in the last couple of weeks. And along with that, Ajay, how do you see this EV theme playing up? Because once again, select companies specifically related to the EV basket, they have started doing very well. Any interest there?
Yeah, we are invested. We are invested in autos at the end of the day. And we are very bullish about autos for the simple reason that autos have finally opened, at least the two-wheelers have opened, and including the car companies, opened up a big market for exports. So while we just focus ourselves on domestic, if you see the export numbers, they are growing much faster than the domestic numbers, and they will become significant in 2 to 3 years' time. Our supply chains are very good. We are very, very confident. Our manufacturing capabilities is very strong. Our brands, we may copy some of them, of course, but they're pretty strong in the market at the end of the day. They're competing. An Indian auto company competes so well with every global major in this country. So all in all, this is a segment ecosystem where the story is strong, not because just the company is strong, but because the infrastructure, there are thousands of ancillaries which are good quality supply chains. We have just created an ecosystem for auto, I think, which is second to none. And I think given the focus on exports now and the rupee at 88 plus, and if you do a forward cover, it will be 91 plus for the next year. That's a hell of a lot of money to make in the export market. So our bullishness stems from ecosystem, strength of brand, strength of companies. All companies are debt-free. Amazing industry. All companies are debt-free. Exports are growing robustly. So don't worry about domestic alone. They will make up their money from exports. And at 91 rupees forward cover, when you are asking for serious money rolling in. So auto, we remain bullish. And I think the good story because domestic and exports, and we are strong as a country in that.
So Ajay, what is it that you've done in the last 2 months at a time when FIIs pretty much consistently have sold massively? I was just looking at the August figures, as humongous as 40,000 crore rupees, and then so many uncertainties on the tariff front, etc. Sure enough, the GST kicker will at least lift some sentiment. The GDP data is all good. But as an investor, what is it that you've done? Because the market levels are still pretty range bound. In fact, if nothing, we're only grinding lower.
You know, the beauty of India is that you guys look at the market, we go look at stories at the end of the day. Still, there are enormously beautiful stories coming out in the market, and therefore you remain invested. We have increased our investment, in fact, to the market. Nothing to do in Nifty 50, by and large, 1 or 2 stocks that we've got there at this point of time. But there are so many stories in this market which have, newer industries, newer companies, new listings are coming up in the market. And I think you mentioned, for instance, the EV space. There are 2 good, now at least valuation-wise, 2 good EV companies sitting there which are focused on EV. They will make their market share. Don't worry about it. So, in a market, this has to be very stock-specific market. You've got to be very clear why you're buying the stock, how long you plan to hold it, and not much comes out of the Nifty 50 universe at this point of time. Banking, we are almost zero. We don't invest in banking for the last 4 years. We haven't invested a single penny. So it's a very focused investment. Healthcare is one of our largest segments of investment at this point of time, between autos, healthcare, and some of the engineering stories which are sitting in the market, and some of the consumer kind of e-com kind of a nature of the companies. That builds up a portfolio at the end of the day. And the good part is that you're getting IPOs every day. We may not like the valuations. They correct, they don't correct. But fact is, new stories come to the market every day. And therefore, we don't have to rely on steel, cement, and all the old foggies that we need to buy on. So answer is, in summary, we have increased our investment, but very focused. We are not in banking. We are not in Nifty 50. I think 1 stock perhaps. That's all about it. But overall, we have increased our exposure to the market.
Very interesting. Perhaps the only one who's staying out of large caps right now. But Ajay, so good to have you on the show as always.
Thank you very much. You have a good day.
You too. Okay, let's now talk about what's happening with Sai Life Sciences. The fact that TPG Asia has exited this particular pharma company, selling their